Hello.
Hello, insurance bro.
Bro.
How are you?
Good, and you?
I'm good, thank you.
Oh, thanks for having us out today. Oh, wait a minute. We're always out today.
We're always out today, and this is week 7.
7.
Yeah,
Oh my
lucky
gosh.
number 7. Can
I
you
thought we
believe
were on
that?
week 5. I missed the whole week. I'm just
So, we're getting a lot of questions.
right. We get a lot of questions offline. Thanks for everybody for asking questions.
Yeah, absolutely.
About different types of insurances too.
I really
What's come up?
long-term care,
Yes, that's
just disability.
all that ties together with long-term
Yeah,
care.
I think it also ties in a little bit with life.
Life, it does. Yes, there's a lot of different types of insurances out there
Okay.
that you can get.
Who is disability insurance for?
So basically, if you have a job and you get hurt, disabled, you want to cover the income coming in. So disability can cover major medical things like Aflac type stuff. But it's mainly kind of a replacement of income.
Mm.
So if you're a nursing student, you become a nurse.
Yeah.
You spend all that time and money, going to school and training, and then you get out and you get a nice high-paying job, and you're working and you get in a car accident, and now all of a sudden you're not working anymore. Well, where's your income coming in? So you need, some disability insurance to cover the loss of what could happen, and then at that point, it just depends on how much of your income you want to cover.
I think it's important to note that it's different than a work comp situation.
Yeah.
So if you
Why
get
do they work comp?
so if you get hurt at work and you're a W-2'd employee,
Yeah.
that's a different situation
Is
than
that like disability
that
from work?
is disability, but that's provided by the employer.
Okay.
And so the work comp is gonna handle that catastrophic event, right? You fall down, you lurch your back while you're loading a patient up, let's say.
Yeah.
Right? And so that's going to cover that, and it's going to work like short and long-term disability, right? There's certain things where it kicks in after, I don't know, it automatically goes like short-term disability, and then like
long-term eventually.
Yeah, like within random like amount of days, like 8 or 9 days.
How long can you keep workers' comp? Or like, if you're not working anymore because something happened and now you're on work comp and it turns into long-term disability, how long?
Well,
on average, I mean, is it a lifetime thing or?
I mean, I guess it could.
Am I putting you on the spot?
You are kind of putting me on the spot. That's all right. Here's what I tell my business owners about work comp, especially a claim.
Okay.
Right. So once the claim happens, you want to get that handled as soon as possible. So that means that an employee gets hurt right away, and then and if they're out, right?
Right.
You want to make sure that you're working directly with that claims adjuster, the insurance company, and your insurance rep. I put it like this: when you're driving down the freeway, you want to make sure that you get off on the first available off ramp, because all that work comp claim is going to do is going to cost you money.
Yeah.
And so a work comp claim will follow you for 3 years, and it looks in the rear view mirror. And I know this is not what we had decided to talk about, but
it's good.
But work comp looks in the rear view mirror. And so that claim is going to follow you actually for like 3 or 4 years. And that's going to affect your experience modification. The experience modification is the rate factor times the job classification. So everybody gets an experience modification of 1. That's par.
So these are employees.
Employees. So
they don't follow you from job to job.
So here, let me break it down for like the best example. So if you are a home health company, right? You're going into private care assisted living homes, and you are a W-2'd employee of a home health care company, and you get hurt. They have a work comp is a risk pool by the state, and you have the ability to pay that based off of whatever that rate is on your payroll.
Right,
So it might be 1.5 times every $100 of payroll divided by 100. That's what your rate is going to be.
Okay.
And so if you have a $50,000 in payroll, that's good. It's going to be that rate, right?
Yep.
So then if you were to experience a claim, your rate, instead of being that 1 and multiplying it times 1, you might now be multiplying it by 1.2. So you just add 20% to whatever your rate classification is.
So the business owner.
Yes.
Okay.
And that's why it's so important to have safety in place.
Right. Make sure everyone's wearing back braces.
Absolutely.
And covered insurance for different things.
I know it sounds kind of,
training.
yeah, it's kind of hokey, and you're going to get a lot of eye roll, like, but you should be having weekly, daily, monthly, quarterly safety meetings and talk about a specific topic. If you have the ability to, you should have like a safety coordinator, someone who will go around to different sites and make sure that you're doing things the right way.
Right.
Now, this is a lot different than if you were off the clock and you got hurt. That's when that AFLAC kicks in.
Right. So if you're an employee and your company offers disability, life insurance, long-term care, whatever, through cancer insurance, through your benefit package. So there are group benefit packages you can get. If you're in that situation, I would say get whatever they're offering.
Yeah.
It's usually pennies on the dollar.
Usually it's at the bottom of your check, and it's the one where it's like 37 cents for that payroll period.
Right. Yeah. So it's usually pennies on the dollar, but it's totally worth it. If you have a workers' comp claim and you have the disability, you can also turn on the disability and get paid from that. So that'll cover part of your income in a sense. So you can set it up to where you can always buy it off the books yourselves from an insurance agent, but you would pretty much be buying a percentage of your income over so many years, and that's kind of how it's set.
How they set the premium.
Right. So the premium goes up if you want to buy 50% of your income, or 75, 100%. You can get more than your whole income back off disability. You're going to pay for it in premiums, but if you get disabled, it's going to pay you your income. So
I think it's important to note as well is in the senior care living world, there's a lot of 1099, right? Independent contractor that aren't necessarily W-2. Now, sometimes you run across a W-2, and that's fine. That's all well and good. There's advantages and disadvantages to both.
Right.
But if you are a caregiver, right, and you are a 1099, so beyond the tax ramifications of having to, you're basically not, withholding income tax, right?
Yeah, withhold your own income.
But it becomes really, really important, because if you do get hurt, they're not going to have that work comp there. They're not required to have work comp if they don't have W-2 employees.
Right, you're an independent contractor. You're your own boss at that point.
Yeah, and that is absolutely when that disability insurance kicks in.
Yeah, it comes into play. So having the disability insurance, having some of the other types of insurances that cover things, the cancer insurance. If you get cancer, if you have it in your family, you should get cancer insurance, because if it comes up, it's going to help pay for your treatments, and so you don't have to come out of pocket. Cancer is usually more expensive than regular health care. Regular health care covers a portion of it, but not all of it. So just keep that in mind. It's always good to have that extra bit.
Yeah.
If and who knows what they're going to get, but if it's in the family, probably get it to be safe.
Yeah. I don't know much about that.
I don't know much about it either.
Yeah. I wonder if there's like an underwriting process that you have to go through.
Oh, there
for
is.
it. I bet. They're looking at family history and those types of things.
Yeah.
Very similar to a life insurance situation.
It is. Life insurance. Life insurance is a tricky one. Not everybody gets life insurance. Let's just put it this way.
Right. It's not a right.
It's a want. It could be a need at times, depending on it.
Privilege.
It's more of a privilege.
Interesting.
Yeah. I worked for New York Life for a couple of years, and amazing company, by the way. But um, they the underwriting is strict.
Sure.
So I mean, you can get life insurance from smaller companies, but you kind of get what you pay for.
Yeah.
You might when if something happens, your family might not get the death benefit because they'll find some loophole to
Right.
keep it out of. But
Where you're like, oh no, I weigh 220 pounds and you're really 250, and they're like, well, yep, you lied.
you lied, so we're not paying it. Yeah. So life insurance, yeah. So there's the height and weight, and then there's your medical history.
Sure.
They do look at financial history sometimes and criminal background. And if you are a extremist
And employment.
and employment, yes.
Like if you climb trees
Yep.
and cut down branches, you build roofs or something like that. You are more.
So they'll still give it to you if at those things they increase the monthly premium.
Sure.
So you get rated.
Yeah.
You're not. Whenever you see life insurance on TV and they say, $500,000 for $18, that's like the perfect person.
That's like you've got an
You're like
800 credit score. You're
20 years
6
old,
feet
right,
tall,
right out of
170 pounds, no cholesterol issues,
no smoking,
not diabetic.
exercise on a regular basis, but not too much.
Yeah.
Yeah. And then you come in and you can get it for next to nothing. If you're anybody else, smoking is a big thing. Smoking, tobacco use, vaping, anything with nicotine will knock you down. But there's Lincoln Financial. I have my life insurance with, and they don't count chewing tobacco as the same as smoking.
Interesting.
I know, right? So I got a little bit of a break on that one.
Huh.
I haven't chewed in 2 years, so it's time to renew my. And you can redo, so you can call the insurance company if you lose weight or you quit smoking or something. You can call the insurance company and say, "Hey, I want to do a review," and they'll come back out and retest you. And if you're in better shape than you were when you got it originally,
They'll lower the price.
they'll lower the price.
Yeah, that's great. That's awesome.
Yeah, life insurance is pretty cool.
Yeah. Yeah.
And that's it. We'll touch base on that one later, but you can get a chronic rider on that. So if something happens, you can, it'll help pay.
Well, so that's what I was actually going to bring up originally is that like in a long-term care situation or even like disability, isn't there riders attached to life insurance to where you could essentially file a claim that, hey, now I'm disabled. And I know that there's like, if you're terminally ill, you've got 24 months to live, you can, cash out a policy in some cases, those types of things.
So there is a disability rider. If you become disabled and you can't work anymore, the life insurance company will pay the premiums of the policy to help you keep it in force. So
That's cool.
That's really cool. There is the long-term care chronic illness rider. If you need, and it's like a hybrid life insurance long-term care policy. A percentage of the death benefit, like 50%, usually goes towards your long-term care situation if you need long-term care. So it's kind of using the life insurance while you're alive. There's a little bit, there's less underwriting for that kind of hybrid than there is for straight long-term care. Long-term care, they're looking more cognitive stuff. Long-term care policies are always good to have. And they get a bad rep. People are like, well, I'm never going to use it. And it's too much.
Are they expensive?
It can be, depending on how you slice it up. So if you go in, you meet with an insurance agent, and they're like, well, the assisted living is about $200 a day, and your average lifespan at that point is 3 years. So, we're looking 20 years from now, it'll probably be $300 a day for 3 years. So let's buy you a policy at $300 a day for 3 years. Whatever that lump sum is what we're going to be buying. But that's going to be an expensive plan, let me tell you.
Yeah.
The thing is about and And that's the insurance guy selling you something that you probably don't need.
Mm-hmm.
The thing is you can buy a long-term care plan and put an inflation rider on it.
Oh.
So, maybe it is $200 a day, but maybe you buy a $75 a day plan for 3 years and you put a 5% inflation rider on it. Well, and then you don't need it for 20 years, and all of a sudden it's worth $300-$400 at that point.
Does it have cash value?
It does in a sense, but it's
not
more,
that you could like, hey,
No.
write me a check.
No, what it does is when you have two ADLs, and the plan kicks in, then it starts paying your assisted living.
Mm-hmm.
So it'll either give you a reimbursement or it'll give you a monthly check. So at that point, you get an enforced review. You find out that $75 a day is now $300 a day, 20 years from now, and you can take the full $300 a day, but maybe you only need $150. So you only take $150. Now your policy's going to stretch out another 3 years.
Wow.
So you bought a cheap policy. Now all of a sudden it's doubled in size by the time you need it. There's no sense in buying it doubled in size already. That's just the agent making a big commission.
Interesting.
So I mean, people can afford long-term care insurance. Just get a smaller policy now, knowing it's going to grow for when you need it. Now, it's not going to. If you need it in 2 years, it's not going to be there. I mean, it's going to be there. You bought $50 a day. You got something. Something's better than nothing.
But it's not going to be as robust.
But it's not going to be as robust. But in 20 years from now, it's going to be robust.
Sure.
When you're going to need it, when you're going to use it,
Yeah. Well, insurance companies are for-profit organizations.
They sure are. They sure are.
I think we have merely scratched the surface of this.
Oh, yeah. There's a lot that goes.
And if anybody has any questions, they could probably reach out directly to you.
Well, yeah, just let us know if you have any questions, either of us, and we'll get back to you with, resources, how we can help you get on something.
Yeah, absolutely.
If needed.
Whether you're a business owner and you're looking for that work comp situation, or whether you're an individual and say, oh, no, what if I get hurt? I mean, everybody knows somebody who got hurt at some point and, is either down and out or isn't what they used to be.
Right.
And so that indemnification of making you whole, whether that's financially or physically, is an important aspect of that.
It is, yeah, absolutely. So I mean, employee benefits, indemnity plans, a lot of different things you wouldn't think of, but if it comes up and you're not sure, just give us a call and we can find something that works with whatever you need. So,
awesome.
Yeah, absolutely.
Do you have any events coming up this week?
This week is the Senior Healthcare Solutions event.
Woo!
Yeah, whoop, whoop.
Thursday.
Thursday, yes, 3 to 5. Come on out, happy hour.
Nice.
Mix and mingle. It's on the. I'll post it. It's everywhere.
There you go.
Yeah, you any events?
No. I got to make it out to the senior health care.
Well, I hope you can make it.
Yeah, I got to do that one of these days.
Yeah, one of these days.
Okay, I promise I will.
All right.
If you have a question for us, please send it to us. Leave a comment, like, subscribe, post, all that kind of
Like,
stuff.
subscribe, post, share, let us know.
All that stuff.
If you'd like to be on, let us know.
Yeah, always looking for guests. We had a great guest last week.
Yeah, Brittany was amazing.
And
information.
Looking for ongoing guests.
We got a life coach coming on.
We have a life coach
in a couple weeks.
At the end of May. Coming on the 28th.
That's
and so if you want to share your business, be highlighted, and a part of the Insurance Bros. Hit us up.
Yeah.
Boss, thanks very much.
All right, man.
Appreciate you.
Yeah.